All right, hi there. Today we are going to talk about a stock that got cut in half on Friday during Friday's trading session. It is a stock that is trading on the New York Stock Exchange and that many of you may or may not have heard of. It's Capri Holdings, basically a luxury company. Yeah, and as I said, the stock was down almost 50% on Friday after the proposed $8.5 billion acquisition by rival Tapestry got blocked by US antitrust regulators. And that verdict basically came after a year of investors patiently waiting for a final decision here. Yeah, now a district court in the US has finally made a call here. So we're going to look into this situation, discuss the final verdict here, discuss whether Capri's stock, again down 50% now, may represent an interesting opportunity for investors. We'll discuss the valuation of the stock right now and many more aspects. So without further ado, let's get started. Okay, so what the stock reaction on Friday certainly shows is that the decision, the antitrust decision, has been an absolute disaster for Capri investors. The stock got cut in half, as investors were certainly not anticipating that this acquisition gets blocked. And if we now maybe just take a look at the price range the stock of Capri was trading at ever since the acquisition plans by Tapestry were announced back in August of 2023, we can see that the stock of Capri basically jumped up to $50 a share after the acquisition plans were announced, and ever since traded in the range between $30 to $50 a share. So that's actually quite a wide price range for an acquisition target, which shows that investors weren't really sure how probable an approval of these acquisition plans really were. And basically, Capri is now sitting at a price that it was sitting at in late 2020, before it eventually made a massive move in late 2020 to $35 a share. Again, the price Capri was trading at before the acquisition plans were announced. So as an investor, when I see such a sharp drop in price, I get interested because this is maybe a situation where we may find an opportunity. And what I should say is that I have been an owner of Capri Holdings in the past. In fact, Capri has been one of my most successful investments of all time. If I just consider the time frame in which I owned the stock, I owned it in 2020. If you are a regular viewer of this channel, you might have heard me talking about it. I bought the stock below $10 a share, basically during the COVID bottom. And then the stock very quickly recovered before I sold it in the mid-20s range. So I am familiar with the company here. I don't think it's a super high quality company, but it's a luxury conglomerate to some extent, maybe not really a conglomerate, but we'll get to that in a second. But it includes 3 different brands that are at least considered affordable luxury. So before we actually discuss Capri, the business specifically, let me just comment on the antitrust decision in general, because I looked into it briefly and I have to say that the final verdict here surprises me. Because if a handbag company, which is certainly a category that is not the most important one to consumers as a whole, if one handbag company cannot even acquire a competing handbag company, you may start wondering whether M&A, so merger and acquisitions, are basically that. It also reminded me of the other big acquisition that was planned in 2024 and that got blocked. It wasn't an acquisition, it was a merger. The merger between Spirit Airlines and JetBlue, which back then was also very controversial because, as far as I remember, these 2 airlines are the 5th and 6th largest airlines in the US. And even after the merger, they would have only been the 5th largest airline in the US, which arguably should have improved the competitive environment in the US. It should have led to more competition in the airline space. And similarly here, I don't know, 2 handbag companies forming, I guess, then a luxury conglomerate to be able to better compete with some of the European luxury conglomerates like Richmond or LVMH or MS. Wouldn't that arguably be a good thing for consumers even? And obviously, I'm not a handbag customer or buyer myself, but I would think there are literally hundreds of different handbag brands out there. It's not like the 2 companies were forming some kind of monopoly here. And actually, in preparation for this video, I read a comment by a fund manager that is focused on luxury brands that sort of goes in the same direction. So let me just read this comment to you. So this is a comment by Eric Clark, who's a portfolio manager at the Rational Dynamic Brands Fund. And he said, quote unquote, we don't cover the two brands. And here he's referring to, I think, Tapestry and Capri as the two holding companies because they weren't relevant enough to make our top 200 brands index. So by definition, this shocking block of the acquisition of Capri makes 0 sense. These are two marginal brands trying to compete, so they have zero chance to control the handbag market, hurting consumers. This is a clear overreach of government. Yeah, and maybe just to complete this discussion of whether I think this antitrust decision is justified or not, let me just present the other side of the argument to you. The district judge Jennifer Rochon, she actually commented on the court's decision as well, and she said, quote unquote, downplaying the importance of handbags as non-essential discretionary items that consumers can simply choose not to buy if the price is too high, ignores that handbags are important to many women, not only to express themselves through fashion, but to aid in their daily lives. So I don't want to make this video about this antitrust decision, this FTC decision basically, but I would also be curious what you, as the viewer of this video, think of the decision. Do you think it's justified or not? And with that being said, let's focus more on the business of Capri and maybe the opportunity in Capri's stock. So again, what does Capri actually do? To answer that question, you have to understand the history of Capri. So not too long ago, I think, I'm not sure when it was, but I think back in 2020, I would like to say, or it might have been 2019. Michael Kors, which was also the previous ticker of that company, was just KORS, so Kors, acquired Versace, an Italian brand. Back then, I think for a price of around 2 billion, 2.1 billion US dollars. And after that acquisition, they were basically forming this new umbrella company called Capri Holdings. And today, there are three main brands sitting under that umbrella. That would be Michael Kors, Versace, and also Jimmy Choo. And generally speaking, luxury stocks are businesses that I'm interested in. Because by definition, luxury often translates into pricing power, which is good for shareholders, generally speaking. However, what I think is super critical to understand as an investor, that there are big differences between the type of luxury stocks out there. I would say Capri Holdings and also Tapestry, by the way, they fall into the, call it affordable, accessible luxury bucket. And those type of businesses are much less attractive, in my opinion, than companies that fall into the, what I would refer to as true luxury bucket. Because there you would encounter companies like MS or Ferrari that actually have an enormous pricing power and have a much stronger or long-lasting durability than companies that are operating in the affordable luxury space. And we can see this with regard to Michael Kors and the other brands as well. These brands seem to be deteriorating to some extent. So they are not as durable as, say, brands like MS or Ferrari or Rolex, you name it. But if you have conviction in the durability of an affordable luxury brand, you might still be onto an interesting stock opportunity. Because if we just, for example, look at the gross margin of Capri Holdings, we can see that for the most part of the more recent history of this business, the business produced gross margins above 60%, in fact, oftentimes above 65%, which is definitely a very interesting margin profile that should be able, or that should enable management to translate these gross profit margins into attractive profit margins. So now I'm talking about earnings or free cash flow as well. But then again, what you have to understand is how strong are the brands under the Capri Holdings umbrella. And personally, I have the impression, and I can back this up with some numbers as well, that the brands tend to be deteriorating a little bit. If we just look at how revenue developed over the last couple of quarters, for example, we can see that Capri's revenue actually declined in 7 consecutive quarters, which would absolutely be something that would worry me as an investor. That's basically a red flag to me. So even though the business is still posting quite attractive margins, the demand seems to be slowing or in fact declining here. But to be fair, the whole luxury space, with maybe the exception of MS, but even LVMH, I think, has come under pressure in the more recent quarters. The whole category, the whole space has had a hard or difficult time in the last 2 years or so. So if you take all of this together, declining revenue, combined with the decision the decision by Capri's management team that maybe it's best to simply be acquired by a competitor, all of this sort of gives me the hunch that the brands aren't doing too well and are in fact deteriorating. And there's actually something that Michael Kors, so the designer Michael Kors, also testified during the antitrust trial. So let me quote him here. He said, I don't have a direct quote here, but that Michael Kors was definitely facing a ton of challenges during a time of a fast-paced digital world where brand strength and brand durability also depend on social media platforms like TikTok, for example. And Michael Kors apparently hasn't successfully managed that transition to a more digitally oriented, social media influenced world. And he also said, and this is a direct quote now, I think we've reached the point of brand fatigue, which obviously is something you don't want an executive of the company you want to consider owning say. Although to be fair, he said this during the antitrust trial, so of course he had his own agenda here. But anyway, it doesn't give me conviction in the Capri Holding brands. But then again, on the other hand, you might argue that the gross margin profile of the three Capri brands, again, Michael Kors, Versace, and Jimmy Choo, maybe gives you an indication that the brands are in fact still intact. The brand strength is still there, but that we are just going through a period of slowing, depressed consumer demand, and that eventually that affordable luxury market will recover. That is a decision you will have to make an investor. And personally, I don't have conviction in either side, to be fair. I really don't know. What I will also say is that I'm not a big fan of the Capri management team. So basically the CEO of Capri Holdings is John Idle, and I think he's been with the company for more than 10 years. I think he's been leading the company for 13 years in total. And I think he and his management team haven't really done a good job leveraging the Versace brand, for example. If we go back to the income statement, for example, again, we can see that Capri's revenue has been, let me just flip to the last 12 months here. Revenue is pretty much flat ever since, say 2018, 2019, it's pretty much unchanged. And what I also dislike about Capri's stock is that there's very little insider ownership. So no one in the management team owns a meaningful amount of Capri stock. Which brings me to the last chapter of this video, valuation. So obviously, just because the brands are deteriorating, this doesn't mean that the stock may not represent an interesting opportunity, because if the price is cheap enough, say Capri is trading at a price of say 1 times, 2 times its free cash flow, well then regardless of whether the brands are deteriorating or not, you may still find an interesting opportunity here. So actually did a DCF valuation, so a discounted cash flow valuation. And let me just walk you through some of my assumptions here. So I was assuming that the normalized free cash flow generation capability of Capri Holdings is around $400 million, which translates to a high single-digit free cash flow margin. To be fair, in the more recent quarters, the free cash flow margin has actually been lower. So I'm already making the call here that maybe a new management team, if the current management team may be replaced, for example, may be able to turn things around and improve profitability again. Because what I should say, and I forgot to say this earlier, in a way, what we are seeing here at Capri Holdings may be operating leverage in reverse. So we, as I said, we have been seeing 6 or 7 quarters of consecutive revenue declines. And at the same time, the profit margins have also been declining. And actually created one interesting chart over at Koifin that shows the SG&A expenses of Capri Holdings as a percentage of revenue. And as you can see, it has consistently been trending upward basically ever since early 2023. And now makes up more than 50% of Capri's total revenue, which again is contributing to the declining and very depressed free cash flow margins. All right, back to my discounted cash flow valuation approach. So I was assuming normalized free cash flow of around 400 million and then took the shares outstanding. I assumed 3% growth of free cash flow in the first 5 years and also between year 6 and year 10, and then assumed that there's virtually no growth after year 10. Now, if you exclude Capri's debt for a second here, but you shouldn't do that, just for the sake of exemplifying this here. Then my estimate of Capri's current intrinsic value per share would be $37, which would be much higher than the current share price Capri is trading at on the New York Stock Exchange of around, I think, $21 per share. So these assumptions here, which aren't overly optimistic, so I'm only assuming 3% growth for the next 10 years and then no growth in the terminal growth period. These assumptions already allow me to buy Capri Holdings at a significant margin of safety. But as I said, if you're interested in Capri Holdings, I think you ultimately also need to take a look at the balance sheet of the company. By the way, that's what you should do for every company, of course. But Capri carries a meaningful amount of debt. And I'm just going to display the balance sheet of Capri Holdings on screen right now, and you can do the calculations yourself. I was basically doing some back of the napkin math here, and I was assuming that we definitely need to add at least $2 billion in liabilities to our DCF model. And keep in mind that based on a share price of around $21, Capri is quote-unquote only trading at a market capitalization of $2.5 billion. So basically, if you calculate the enterprise value, it's almost double the market cap, just because Capri carries so much debt. So if we factor this into our DCF model here, we can see that all of a sudden our assumed intrinsic value per share is only $20 per share. And if we now demand a margin of safety on top of that, well, then we may already no longer be able to purchase Capri at an attractive price here. So what you may already be hearing between the lines of my comments here is that I simply lack the conviction to really project where revenue is going, where the free cash flow margin profile is going for Capri Holdings, and whether the brands of Capri Holdings, again, Versace, Jimmy Choo, and Michael Kors, whether they are really intact and will still be as strong 10 years from now as they are today. And if you cannot make that call, you cannot invest in Capri Holdings. If, on the other hand, you believe in the durability of these brands, you believe that the management team, maybe now that the acquisition has been blocked, needs to refocus, needs to focus on unlocking the value of these brands, needs to maybe develop new strategies for these businesses, for these brands going forward, well, then you might have an attractive investment case here. And of course, and I haven't said this so far, I think both Capri and Tapestry, they are appealing the decision by the district court here. So that's maybe another possible outcome where shareholders at the current price will have a favorable outcome. But again, that's a lot of ifs, and I don't have the conviction in the thesis right now. I don't really want to put my hard-earned money into this stock because, quite frankly, I don't think it's a high-quality business in its current state. Okay, with that, I'm going to wrap it up. Let me know what you think of my thoughts, what you think of Capri Holdings stock, and I'll talk to you in one of my future videos. Take care.